Welcome to Dave and Dharm Demystify, a fintech futures podcast helping make sense of the world of fintech and digital finance. Please sit back and listen as the two Ds take a subject and discuss it to make it clearer and easier to understand.
Demystify.
Welcome everybody to another edition of the Dave and Dharm Demystify show, and this week we have a special guest from Bank of New York. It's Carl Slabicki. Welcome, Carl. For the audience, would you like to introduce yourself and give us a bit about your background and what you do currently at BNY?
Sure. Well, first of all, thank you for having me here. Looking forward to speaking with you today. Carl Slabicki, the executive platform owner for Treasury Services at BNY. So I lead our payments, cash management, and trade finance business for our clients globally. I've been with BNY for 10 years, and it's really great working with our clients all across the globe, from banks to broker-dealers, wealth managers and advisors, to corporates and even government entities. So we have a great vantage point across the market and really enjoy working with our clients every day.
Fantastic. And I guess I'm familiar with Treasury because it was one of the components that we used to sell at Temenos. But for those people that may not be familiar, what is it at Treasury that you do as Treasury Services?
Yeah, it's great to see the scale of what BNY can bring to the market and our clients and what we see. So if you think about the footprint that BNY has, right, as a large global custodian with $50 trillion in custody, over $2 trillion in active management, and you go then to our Treasury Services and our payments business, and you look at the scale that we have there, we move over $3 trillion a day for our clients around the globe. So what we do for a lot of banks, so we have over 2,500 banks that we support in most major markets across the globe. We're doing things like helping them move cash for their clients, right? So giving them access to US dollar clearing and to the market to actually clear US dollars for trade business, for retail remittance flows, and so on, and doing that at scale. But we also clear payments in over 130 currencies for them as well. So performing FX, doing cross-border money movement, helping them finance receivables for export relationships, for import relationships, helping them with their entire working capital cycle. And then even if you look into the US market, where we diversify our clientele a bit more into the corporate or fintech or government space, we're really helping corporate treasurers manage the entire working capital lifecycle for optimizing payments, optimizing receivables, investing, financing, those type of things for that entire wheel. And we often get very embedded into the end experience, whether it's a business or a consumer, and how we can really help change that dynamic, right? And, Treasury Services has evolved from what, years ago used to be a back office function for a lot of operations. It was always, I'm going to do something with a business, a service provider now, but everything Treasury Services related was going to take place in some sort of batch process, multi-hours or in some cases days later. And I think BNY has really been on the front end, especially in our Treasury Services business, on really pushing the agenda on bringing the financial services ecosystem to a truly 24/7 instant service, right? How can we, one, work with the market infrastructure providers like SWIFT, the Clearinghouse, the Federal Reserve, NACHA, others, to really move the needle on what market infrastructure provides? How can BNY be in a position to take what that is and actually provide it to our clients, but also fill the gaps on that through some creative and innovative ways, and then bring our clients along for that journey, so that at the end of the day, things that were just moving money, managing liquidity behind the scenes, and it was looked at kind of as a risk and a cost-effective means to treasurers, it is now wow, these capabilities can actually enhance my customer experience. They can enhance how we do business. They're used as a competitive edge for how we work in the market. And that's the magic stuff that we really love managing, right? Balancing the industry dynamics with our own innovation and bringing those clients along for the journey. So we have a great vantage point on the scale of payments, trade flows, cash management, investment portfolios of what we do for our clients, and turning the corner on that, as well as really focusing on how we can even take the data and insights we collect on what we do and providing that back to our clients as additional value-added services is really an exciting place to be.
So, the world is very different now from how it was, I guess, even sort of 5-10 years. I looked at HSBC Net and because I was working with WPP and we wanted to have a look at treasury management, and I looked at their platform. And I guess that's probably 5 years ago. But the world from 5 years ago is so completely different now, isn't it? Because of, as you say, how things are becoming more real time. And I'm sure as well as opportunities, that creates a number of challenges, doesn't it? Because within all of this is the opportunity for companies to come in and sort of disrupt things.
Yeah, you're absolutely right. The whole ecosystem is really kind of broke through this ceiling that was on there from a service availability and speed of service perspective. So most Treasury Services, right, going back 5-10 years, I used to be a corporate treasurer before joining the bank, so I kind of lived in these shoes for quite a bit, where you're consuming reports from a bank Monday through Friday within operating hours. You have finite hours of which you can actually move and settle money. You have a finite time in each day where you can actually settle your position, whether you have money to invest, whether you need to borrow, and kind of hit your target balances and set your position. And then, right, by 3, 4, 5 o'clock, those markets close, those deadlines hit, and everything just stops, right?
Yeah.
And the world, outside of that kind of keeps going. With the dawn of instant payments and real-time payments, right, whether it's RTP initially here in 2017 or FedNow or the 100 markets across the globe that have some type of instant payment system, that was the first real core infrastructure breakthrough I think we hit that is now testing the rest of the financial market. And when we talk to our clients who are now operating digital wallets 24/7, 365, trying to put a cool retail investor experience out there to let them fund and be able to start trading on a Saturday or a Sunday, right? And then placing orders, collecting bills in real time on a night or a weekend and those type of things, where the payment is now available to settle instantly. Now they say, okay, well, what about the rest of the financial services that you provide? Can I do 7-day accounting? Can I borrow or invest on nights, weekends, and holidays? Can you do FX settlement for me on a continuous rolling basis? What about the other reporting capabilities and the visibility I need to manage my cash position on a continuous basis? What about the servicing model, right, in terms of who I can call if something goes wrong? So I think it's healthy and natural, I think, for the market to evolve in this way and kind of meet the needs of the end consumer. But as you think about it at that scale, both for the market infrastructure, for the bank providers, but also for the corporates and the end users, it's quite a big lift from the status quo of what they were used to from a Monday through Friday service and consumption model to now saying, how do you evolve into a continuous operating model, right? Where money is moving 24/7, 365, it is settling, things are changing, and you're going to need that full breadth. And it's a bit scary. I think, we see corporates saying, oh my God, we can't staff a team to work 24/7. But I think that's the exciting part where automation comes in, right? How can AI leveraged? How can automation be leveraged? How can you use technology and processes to not just supplement it with resource power in terms of human capacity, but actually being smarter in terms of how you leverage processing and tooling to actually sustain that momentum?
So, I mean, it's interesting you mentioned AI. So I presume that a big part of what you're doing is looking at AI. And I just wonder if you could kind of talk specifically about some of the use cases that you have.
Yeah, absolutely. AI is something that BNY is truly going all in on and trying to lead in the financial services space. We took a unique approach in this space where BNY actually launched an internal AI platform called Eliza. BNY was founded by Alexander Hamilton 241 years ago, and his wife's name was Eliza.
Right.
So we named our AI platform after his wife. And it was a BNY internal proprietary platform to begin testing different use cases, accessing different data sets across the firm, seeing how we can leverage it for search and pulling out relevant information. The unique approach is that now we're also plugging into external learning models. So ChatGPT, OpenAI, et cetera, we're able to actually plug those in and augment it with external third-party learning models. And we have hundreds of use cases across BNY that are now using the central AI hub. So within our own business, we're doing things such as payment repairs, right? Where, cross-border wire payments would fall into an operator queue. Someone would have to look at it, missing information or make repairs and so on and so forth. And now we actually have AI agents that can actually perform that at greater speed, greater consistently, and assist the operators in terms of getting to the right answer and actually moving forward. So we're using it in a ton of areas for automation and operational efficiency. It also applies to the engineering stack as well, where we can actually use it to write better and more robust user stories for code development. We can utilize it to draft code to help our engineers get a faster time to market, and we can utilize it to write test cases for us. So you look at the entire engineering delivery train and helping us actually accelerate our speed to market on building and testing new capabilities. It's actually trying to utilize it there as well. And we think that's going to be a big accelerant. Going back to what we were talking about on data and analytics, given the scope of what BNY has access to me, this is a very, very valuable tool that our clients want to leverage, right? They want to be able to take the data set of what they do with us, what we see at scale, right, in an appropriate, anonymized, and data-governed way, but how we can actually give them AI agents and tools to understand our services, to utilize our services, to get insights on the analytics, the cash flow forecasting, right, potential payment trends, how to optimize FX payments. There's an endless amount of options there on how our clients can actually utilize AI as a service complementary to what we do with it. So we're really looking across the board from operational efficiency to an engineering accelerant to also value-added services that our clients can utilize.
I mean, that is really interesting because, again, going back to the experience I had, is you realize that something like a treasury management or a kind of corporate banking platform is so big and so deep that clients often have no idea what's sort of underneath there. So actually, if you're using AI to kind of unearth functionality which may be appropriate to them, that's, I think, a fantastic case study. We always used to talk about the unknown unknowns, like a certain gentleman once mentioned, but it seemed to be very applicable to corporate banking. So that's fascinating.
It is, and often the challenge there has always been getting structured data from a lot of different sources, bringing it together, and then thinking about what analytics and insights you can drive off of it. I know a lot of entities across the market deal with. I think the thing that was the biggest surprise to me with AI and truly the power of what it can bring is that it can take different structured data sets and bring it together and synergize it without having to do all that groundwork up front. Its ability to bring unstructured data together, identify the linkages and the patterns, and bring the insights off of that in such a fast way is really eye-opening when you start to see visually the demos and the use cases where that's being applied.
I mean, I like the positive approach that you've taken. Clearly, everyone is worried about privacy, about hallucinations, about all of the downsides of AI. But I'm sure you kind of handle those, but you're focusing very much on positively improving the experience for customers, which I think is extremely laudable. It's a fantastic attitude to take to stuff. The thing that fascinates me, I mean, you said right at the outset some really big numbers, and immediately as a technologist, I kind of think, oh my God, how are they scaling that? So I don't know if you can answer that, but I'd be very intrigued to know because, other banks we've seen, yes, okay, this is on the retail side. We've seen banks crumble because of whatever that, IT systems outages, but they're not dealing with the volumes that you are, right? So how are you managing to keep the lights on and operate at this kind of amazing level?
Yeah, I think it goes to a couple points. If you take BNY's history, being around 241 years, as the oldest bank in the United States, the position we're in to hold over $50 trillion in custody for the financial markets, what we do for the US government, what we do for 2,500 banks globally for money movement, we are a true systemic piece of financial market infrastructure, right, for the globe. And, I'll steal a quote from our CEO who always says resiliency is commercial, right? In times, as you look at the changes in the market over time and you go through different financial crises, recessions, et cetera, BNY has historically been a flight to safety and a safe harbor for those in those times of needs when we go through these different periods. And that to us is really core to what we do and how we serve the market. And it's kept clients and it's kept that trust with us over that duration. So, within that, right, when we look at where we invest, what we need to do, the resiliency we need to have between either our data centers, our operational processes, the infrastructure, the scalability of what we do, given the size and scale of what we do already, right, the trajectory that we're on as a firm and what we want to achieve, there's certainly no cutting corners when it comes to that part of the ecosystem. It's really impressive what our team does. We actually have a cyber technology and operational command center here at our headquarters that we frequently will walk our clients and partners through to showcase how we are investing in this and keeping visibility on the scale and the operational capacity that we have as a firm. So that to me is a big cornerstone of if you don't have that, You can't be good at the cool stuff and the shiny stuff on the front end in terms of the features and capabilities and service model. It's truly table stakes, especially at the scale that we operate, to not really cut any corners or sacrifice on that level.
A bank of your age, you'd kind of think that you still got some mainframes running in the background somewhere, but clearly that can't be the case. So how have you kept up with technology to maintain this availability and scalability?
From a Treasury Services perspective, I can share, a lot of our clientele are serving other clients, right? And that is core to a big part of BNY's holistic DNA, which is how do we help as a platform other financial service providers, whether they be banks, broker-dealers, wealth managers, fintechs, MSBs, et cetera. How can we provide a resilient, stable, scalable platform for them to innovate on and scale? So when you have that type of a mindset and you look at whether you're going to launch instant payments, how you support your APIs, how you're going to provide different liquidity services. In order to do that effectively, you have to be fast to market because you need to be early. So as the other financial service providers evaluate, hey, I need to provide instant payments to my clients. I need to offer these new capabilities and new services. If you're not early on the curve there with a scalable platform, they're going to make those other decisions and you're going to miss the market. So time and time again, we are often, and we have a whole list of, say firsts that we're very proud of, but it's part of our approach here, which is we want to be first in market because as those providers see and they over time see and understand and hear the client demand and see the market competition and their peers doing these type of things, right? We want to be that entity out there that's proven and is helping the market do that, right? So speed to market and scalability is all part of that. And they need to say, why should I go with BNY, right? And I think those are all just layers to that story, which is proven, scalable, first, eating our own cooking, right? And that's, I think, another cool part about what we're doing with is the diversity of businesses that BNY has, from Pershing to private wealth to our custody business to things we're doing in the digital asset space and so on and so forth. There's a lot of areas where we have natural synergies even within BNY to leverage and get advantage of these capabilities. So when we do that, we do it at scale and we can talk to our clients and we can show them all the areas where we're consuming instant payments, where we're doing cool things and data validation, where we're leveraging innovative liquidity services, and we can show that we're actually utilizing it in other areas of our business. Again, you have just another element to that layer as to why they can benefit from that scale themselves.
So one of the questions I've got is, how do you work with the regulator? Because I guess what you're dealing with is things at such a huge scale that the regulator and the sort of speed of change, the regulator may not be keeping up with things in the same way that you are, but obviously regulation is critically important. So how are you working with the regulator around this changing world?
Yeah, it's absolute transparency in terms of what are we doing in terms of products and solutions and clients that are live and how is that going and how are we managing and supporting that. Transparency on what we're building and our roadmap and what we're working on, and then also early stage what we're evaluating, right? To me, in that realm, right, you don't want any surprises. So open and honest transparency about how we see the market, what we're evaluating, what we're early stages on in business case evaluation, what we're a little bit more mature versus things that we're about to launch. I mean, it's a whole pipeline of ideas and innovative things that are coming in from the market that we're constantly evaluating. Where do we spend our time, our resources? How do we react to either changing economic conditions? How do we react to changing perspectives on digital assets or stable coins or central bank digital currency, or these areas that continue to challenge different parts of the financial and payments ecosystem? Our view has always been to be, even with our clients, right, constantly showcasing a bit of our perspective on where we think things are a bit hype, where we think things are real, where we think they actually fit into the market, and using that as a way to actually gain feedback and pulse check the industry and our clients to see if we're on the right track, whether we need to adjust our thinking, and if ultimately we need to adjust anything on our roadmap down that journey. But, with our clients as well as with the regulators, right, it's just, you don't build in silos. You have to really be open and transparent about your plans so that feedback can help you actually adjust as you prepare to go to market with anything.
That's fascinating. And I guess the other big area is sort of fraud management as well, with things becoming more real time. I mean, fraud must be a headache. How are you kind of addressing that? And I guess AI plays a part in that as well.
Yeah, fraud is still, I'll say, fairly rampant across big parts of the industry, whether it's account takeover fraud at retail institutions, whether it's check fraud, whether it's card fraud, whether it's fraud on different models. I think there's layers to this. The tooling that's now available to BNY and other financial service providers is much better than it was in the past, when you can apply machine learning and AI analytics over bigger swaths of data sets. You can get better anomaly detection in real time to make better decisions for both as a firm and for your clients. So I think the tools continue to grow. The challenge is, and this is just a general market trend, is as the tools grow, they also grow for the fraudsters and the bad actors within the system as well, right? Yeah. So it's always a race within that in terms of how you're managing and battling that. One of the things that I think is the interesting thing in the fraud space that we've been a vocal proponent of, I know NACHA is put out a risk management framework that promotes this as well. The Clearinghouse and the Fed are actively evaluating how they do this within their instant payment networks, is that in order to really fight fraud holistically and systemically, you actually need fraud information sharing across the industry, rather than relying on banks to look at their own data set one by one, where you may only see a certain piece of the puzzle, right? Where you have dynamics in the industry for fraudsters that, whether they're trying to perform a scam on a bank or a telecom or an insurance company, it's largely known in the market that most of those entities don't talk to each other, right? So as they go to one telecom company, an insurance company, a bank, and they commit a fraud until they get caught, and then they typically just wind up going next door, right, and starting the same fraud because they know there's not great information sharing. A lot of what we're trying to do at a network level across the payment networks is say, how do we take the central data sets of the networks, whether it's the instant payment networks, the ACH networks, wire processing, et cetera, and use anomaly detection at that level for all players that are now entering and about to introduce new transactions, right? And how can we actually, as one bank of 9,000 in the United States, actually see, hey, there's a higher risk score of a transaction we're going to do because there's a suspicious pattern that come up and is emerging, and this is now potentially likely a scam, and it's going on with 50 other banks that you may have not seen before, but now we can access that data. So I think central data aggregation, where the operators sit, right, where folks like NACHA sit, and they're able to see that, and central tools within the market, the benefits are going to be absolutely massive if we're able to deploy that at scale. That's a better way to more systemically root out fraud, leveraging that central data. Will never stop. But if you look at the trends now in terms of how quick it takes to actually detect it and stop it, right, and build that perimeter, you're going to be much faster in an industry if you do that centrally and then figure out how to do this across the network, as opposed to just everyone going on that on their own.
If it becomes centralized, then you're talking about orders of magnitude in terms of data and things in real time above what's being dealt with at the moment. Are you looking at things like quantum computing? Is that interesting? Because, how you kind of do all of these things in real time takes an enormous amount of processing power, doesn't it?
It does, absolutely. If you think about the scale of the data set, right, for all transactions in the market, right? So you're talking about billions and billions of individual transactions, and the ability to establish patterns off of those in real time, noting a new fraud or scam may erupt within minutes, and detecting that and then giving the insights to someone that's about to send a new transaction. The scale and the speed is really, phenomenal, to your point. But we know this model has actually worked in other markets. So if you look at UK and UK Faster Payments, they deployed a central fraud operating model to allow senders to detect fraud scores before they enter it based off of the network-wide data, right? So it's worked in other areas. And I think in the US market, some of the things that the industry needs to work through are, right, how do you protect the data? How do you anonymize the data? How do you manage liabilities on what's being published there to not get unintended consequences of, someone being flagged and it stops their payroll, as an example, and it's something that wasn't truly a fraud, and how do you manage false positives and those type of things. So it needs to be done in the right way to protect the data and protect the unintended, false positives. But the benefit is absolutely massive when you think about the fraud that it can actually pull out of the system if you do that the right way centrally.
Are you looking at things like quantum computing as a strategy around all of this as well?
Oh, yeah. Yes, absolutely. Yes, the processing power is absolutely critical to this, right? So even if you look at BNY, just as an example, BNY was the first major bank in 2024 to deploy an NVIDIA SuperPod. So kind of along the lines of, we know AI is going to be a powerful learning model to be deployed. We know the computing power is going to be a critical part of that, right? We were first to market with partnering with NVIDIA to deploy those type of processing speeds and capabilities last year. We're trying to build a unique model, knowing that, if you look at AI, I think the thing we're seeing is like the benefits are undeniable, but the process and the different learning models are going to continuously change. And you don't know which one is going to be the best. It's likely going to be a combination of them. Hence, you need to be able to plug into multiple to be able to do that effectively, right? So the combination of the computing power plus an open model framework on AI, that to me is really how you can achieve, right? Whether it's fraud, whether it's analytics, whether it's cash flow forecasting, any use case you can really think of there.
That's amazing. That is truly amazing. Just, I guess, with the fraud, it's very data orientated, but with cyber, that isn't strictly, data orientated. How are you keeping up with, things on the cyber front? I know you said you've got this big cyber center. What can you tell us about like how you handle cyber and stay up to speed with, things in that space? Because it's not really about patterns of data, is it?
Yeah, it's a multi-layered approach. Cyber security. I remember talking with our peers across different banks, noting that cyber threats and cyber resiliency is such a focus area, right? Whether you're talking about market infrastructure providers, banks, or other financial service providers as well, cyber resiliency has been a massive hot topic over the last several years, right? It has been for a long time, but especially over the last couple of years with real or perceived threat being increased on that. It is just a constant evolution and a constant investment and effort, right? So, BNY, I think we're lucky to have a world-class team really monitoring that at scale with the tooling, the infrastructure that we've built, and the experts that we've brought in. And that to us, again, kind of going back to the resiliency being commercial, that's something that we actually actively showcase to our clients as to what we're doing in that space, right? Because they want to put their money and their assets and their trust with someone that's going to protect their assets and keep them safe and move them safely and efficiently for them. That to us is part of the value we actually bring to the market. It's not just the speed and the features of the products, it's actually how we're managing cyber resiliency, how we're managing operational resiliency, how we're dealing with cyber threats, and hence why we often showcase those capabilities to the market and to our client.
And do you collaborate with the other banks on this? Because obviously this helps everybody, not, it's not necessarily a competitive edge, is it?
Yeah, absolutely agree. This is back to my comments on fraud information sharing, just on the importance of data sets, even with best practices in terms of how we're approaching things. You're right. Everyone should win together type of thing from a financial market infrastructure. If there's a weak link in the chain, it hurts everyone in the market. So absolutely, a lot of engagement with our peers, with our clients, actively sharing best practices, lessons learned, doing different game scenarios on how we can evaluate different threats that are coming in and how we react to it, how others are. So absolutely, you need to share information here to help everyone be effective.
Amazing. Well, listen, we're out of time, but we're really grateful for you for joining us. I mean, it's an amazing topic, just mind-blowing in terms of the scale that you're kind of dealing with, but really fascinating to hear it all. Thank you so much.
Thank you for tuning in to Dave and Dharm Demystify. We hope you enjoyed the show. Don't forget to like and subscribe, and tune in next time as we take another topic and demystify it.